Well, welcome to the Startup Espresso. I'm Hall T. Martin, the host of the show, where we talk about raising funding for your startup and the time it takes to have an espresso. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. Angel investors fill the gap between family and friends funding and institutional funding. They engage with impact startups in several ways. They fund startups with early stage capital to launch the business. They provide mentorship to the startup founders to help the company. Some angels work as advisors providing services such as accounting or financial work. And some angels form groups to invest in impact startups. Each group focuses on an impact sector or geographic area. Some groups provide funding through individual investments, while others form funds. Angel groups help share the deal flow and the due diligence. Before investing, an angel investor will look at the team to check their experience. They will perform diligence on the company for the business model, the competition, sales and marketing, and intellectual property. And finally, they will look at the impact the startup makes. It's important to measure the impact your startup will have, as investors will decide to invest based on it. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start out something today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.